We have Todd Schoenberger of LandColt Trading. He's looking at the fundamentals for us. Ari Wald is technical strategist at Brown Brothers Harriman, and he has an eye on the charts. And Joe Cusick of Options Express has the trade. So great to see all you guys. I want to start first with you, Todd. Tell us the fundamental reasons why you, and as I understand it, you're pretty bearish on this sector.
That's right, Trish. Well, look, it's a heavy regulatory environment right now for the financial sector. I mean, you could talk about the Durbin Amendment for one thing. I mean, Jamie Dimon brought it up today during the conference call. They lost $350 million just last quarter, and if you look at all of the banks in that sector, JPMorgan is probably the strongest out of all of them. So moving forward into this year, plus next week's earnings reports, I'm not very bullish at all. I think you really might want to stay on the sidelines right now, sell into the strength that we've already seen this year, but get out while you can. Ari,
are the charts telling you something different?
No, I see the exact same thing in the charts. Now, I think near term, I think traders can squeak out a little bit more upside here, but I don't think this is the turn the long-term investors are looking for. When looking at the financial sector spider, it's ticker XLF. Key level I'm watching is 1450. That's resistance now. That's where XLF really started to break down over the summer. I think unless the volume flows come back, which they haven't, I think this rally's capped at 1450.
Okay, I want to get the options viewpoint from Joe here. Joe, I know that you were watching very carefully what happened with JPMorgan today. Tell us how that's affected your plans in terms of what you're going to be doing today and into next week.
Well, I think it's critical that we've seen a really nice march up, especially in the last 3 weeks. So seeing that number come out from JPMorgan, seeing the miss, it actually kind of dampened a lot of enthusiasm as we saw the financials starting to lead lately, which then made us look at those names that are coming out next week. And, you know, I think I have to agree with the two previous guests. We're getting some short-term bearishness right in here, and with the headlights keep coming out of Europe. But remember one thing, Trish. We've been pretty overbought right now, so I'm not surprised going into a long weekend we're seeing the sell-off, but it has changed my short-term perceptions going into next week for the trade.
You know, I wonder how much Europe's factoring into some of your concerns, Todd. I mean, especially when you look at sort of the bulge bracket banks, because as I do understand it, you like some of the U.S. regionals. So talk to me about the difference between the two as you see it, why you see opportunity right now in regionals.
Well, first of all, if you look at just the European debt alone, you look at $1.5 trillion that's out there just from the European countries, what they're holding. Then our domestic banks, you're looking at another $500 billion. So yes, there is immediate exposure that we need to be concerned with. But I think when you look at the regionals, they don't have that type of risk that they need to handle. A great regional right now is Cullen Frost Bankers out of Texas. I mean, this is a company that continues to grow. They're based only in Texas, and they're looking at a population boom of 5 million people over the next 5 years. So people are banking with the regionals. That's a big winner. It's up 16% over the last 3 months.
Yeah, and you think that's going to continue?
I do think it will. I mean, I think you could focus on those regionals. I would stay away from the bulge bracket banks only because of the heavy regulatory
Which one most of all? I mean, which one are you most scared for next week?
Bank of America. I got to tell you, I am scared to death of Bank of America because, first of all, you can look at the trading volumes alone. I mean, JPMorgan was hit big time on those trading revenues. You have to suspect that's going to continue, especially when you look at the Merrill Lynch outlet. And don't forget, Countrywide is still that ticking time bomb with those potential defaults.
From a technical perspective, I know, again, you've been pretty bearish on the sector, Ari, but, you know, look at how much the market has bought into Bank of America just this year. I mean, the stock's really rallied back from some of the lows it's on 2011.
Yeah, they've bounced back, but they were just so beaten down. I mean, really, if they want to make a difference, they have to produce a much firmer, longer-term base. I think if you do want to play financials, I agree. Regional banks are the way to go. I like ticker KRE, which is an ETF way to play that.
Okay.
Relatively, once the big banks go, though, they're going to pull everything down with it.
Okay, Joe, what's the options trade?
Well, you know what, right now, you could play the regionals. Right now, the options trade I'm looking at, I'm not worried about Bank next week. I'm worried about Goldman Sachs next week. Yeah. I think out of all the names that we've talked about today, that's the one you got to watch. I'm looking at potentially, you know, going in there with a bearish sentiment, but playing it conservative, deep in the money put spread. Buying the 105 puts, selling the 100 puts. It's a conservative play. It has about $365 of risk. With the stock trading at 98, you already have a built-in profit. even with the estimated move right now being calculated at $3.50, you're still looking at some in-the-money value. That's the trade that I would be looking at, especially as the slant goes to the bear side. Bank, I'm only seeing a potential estimated move of around 30 cents going into earnings. That's what we're seeing priced into the options marketplace.
Okay, your bull bear call? The bull bear call for you?
My bull bear? My bear is Goldman Sachs. My bull, I'm actually going Sallie Mae.
All right. Good to know. Sallie Mae. All right. Thank you so much to all of you.